All right, the Fed just made a big move. Let's get right into what it means for you.
The Fed is taking action. But is it a lifeline or is it a warning?
So why now? Well, to get it, we have to look at the warning signs flashing. People are spending less, unemployment claims are up, and manufacturing is looking weak. It's uncertain. And in response to all this, the Fed is making its classic move, cutting interest rates. Basically, this is the Fed's main lever to make borrowing money cheaper for everyone.
The hope here is pretty clear. Get people and businesses lending and spending again, fast.
So you've got two camps. One side sees a rally, the other sees a red flag. And this isn't just a local thing, it sends ripples across the entire globe for sure. Okay, but what does this actually mean for you, for Main Street? Let's break that down.
You've got business leaders, homeowners, and investors. They're all watching this very, very closely.
This is the domino effect the Fed is banking on to keep a recession at bay.
But back on Capitol Hill, not everyone is on board. It's a pretty deep divide.
You've got one side saying, go bigger, the economy needs more help to protect jobs. But the other side is hitting the brakes, worried this could actually overheat the economy. So there's the big debate, right? Is this a much-needed boost or a really risky gamble? So the Fed's move is a high-stakes balancing act. There is absolutely no guarantee here. Which leaves us with the million-dollar question. Is this a cure or just a Band-Aid?